Goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, we've got a lot of stuff going on in the markets today. We'll hopefully be able to cover all of it, or some of it, or maybe none of it. But we're going to get something done here. Right now, we're going to take a look at the E-mini S&P. This is the March contract up to date of where we were early this morning. You'll notice that we made that 78% retracement. Those of you that belong to the 24/7 newsletter, Trade What You See, you'll notice that we were looking for a price objective 41.65. It hit 41.75, and now it's sold off quite a bit since that time. But the reason why I'm bringing this chart up to show you is there's a huge difference between the March contract and also the December contract that goes off the board, I believe, on Thursday. Now, if we take a look at the March contract, and we'll get this up here so that you'll be able to see it, because this is very important. When I first started trading the S&P, folks, it was April the 16th of 1982. I think there were 12 people in the pit, and they were grabbed by the ear by Leo Malamed to come into the pit to start trading because there was no interest in stocks. Stocks were, the Dow Jones was at 560, I believe, or some ridiculous amount, and the S&P was trading at 103, the cash market, and believe me, the futures market was trading at a discount. So all you had to do is buy a future and hold it till delivery, and you'd made money. Anyway, this is how it works today. You'll see that we missed the 78% level in the December contract. So to me, that was a sign that was very important. Remember, this thing exploded, folks. We were, at one time, I believe, we were up 700-800 points in the Dow. All I know is from the high that we made earlier this morning, we dropped 1,000 points. You know, it's really, man, we're down on the day right now. We had a high of 35,200. We're at 34,200. You know, the NASDAQ is still up a bit. The E-mini is still up a bit, but the Dow Jones is still down. So you got to pay attention to that. Okay, now I'm going to bring a new chart up here in just a second. So hopefully that will introduce you to some of the patterns that we're watching today. Now here is a pattern, folks. I want to show you now. This is something that we all use. You don't realize that you use it, but we all use it, and that is soybean meal. I want you to see this because you're going to see it again, and it's not going to be soybean meal, but it's an absolute perfect same pattern, and you'll be interested in why this occurs. Okay, here's what we're looking at right now. This is the soybean meal. As you can see here, what we've done is a major, yesterday, a beautiful 78% retracement of the high we made back here where we had the 3 drive to a top pattern right there. Okay, there was a 1.618 expansion of the previous move to the downside. That matches up the harmonics perfectly. All right, and guess what happens, folks? It dropped $2,500 straight down. Oh, say, wow, that's really something. That's really a neat looking pattern. Do you want to see it again, boys and girls? Okay, Johnny, I'm getting ready to bring it up. Just be patient, because here it is in, believe it or not, oh, what did I do here? I mismarked these puppies. Hold on, I got to get them up here. Oh, what did I do wrong? Oh, this is not good, Larry. Oh, nothing like having egg on your face. Anyway, the pattern in the Dow Jones is the same as the pattern. I'm going to have to do it differently right now because of the fact that I mismarked it, and I'll get this done here. I better do it right now. Otherwise, I'm going to mess up and make myself look more like a little charlatan. Well, a magician. Let's call it a magician rather than a charlatan. Let's get the daily up here, and then you'll be able to see it. And there it is. You'll be able to see the same pattern here in the Dow Jones Industrial Average that we had in the soybean meal. And I'm going to go a little bit farther and show you what you can. I don't know what I'm doing this chart the way I always do them, Al. I think I panicked a little bit because I didn't have this Dow Jones chart up to date. But you can see it's the same pattern. You can see there is the 78% level right now. We're now down on the day after that big run up. Maybe the Fed's going to take the president away from us. I don't know what's going to happen, but we're having some volatility. But you're seeing that pattern over again. Now, here's why it's important. Let's say, like today, you didn't want to get involved when the market was going absolutely straight up, and you just didn't want to get involved with that. Say, what would you do? Well, if you pay attention to patterns and prices that repeat over and over again, one of the things that you can work on is the 382 pattern. Now, let me just show it to you. Here is the Dow Jones. All right, let's try it again, Larry. Folks, I'm in holiday mode here in December, so just bear with me. I'm better than this, but I'm just tired, and as you can see, there's your 382 retracement. Beautiful straight up move, stopped dead in its tracks. This is when the market everything was moving, everything was green, and it stopped right at the 382 retracement. Has now since made new lows on the day. Okay, that was the soybean meal. Remember, the patterns look the same. So if that's the case, let's take a look at the Dow Jones Industrial Average to see what happened to that. This one was a whole lot easier because action was happening over there, minute by minute. So if you take a look at this one now, look what it's doing. There was your first 382 retracement right here. There was your second 382 retracement here. Folks, we're off the bottom of this chart already. We're down 1,000 points. So I hope that's better. Al, are the charts any better at all? Because I'm doing exactly the same thing that I do every day, and I hope it's the same. There we go. We are good. Good to go, and hopefully that things are going fine, and we'll see what's happening. I think we have a caller coming in. How did that person ever get through with all the lines red like they usually are? Holy moly, guacamole. And anyway, we're going to cover a couple other of these charts coming up, but we've got Marshall from Washington, the state of Washington. Mr. Robinson is in the house. Marshall, what can I do for you?
Merry Christmas, Larry.
Merry Christmas to you and your lovely wife, Lynn. What can I help you with, buddy?
I'm curious how they go about determining settlement prices, because I find that very often they'll have a price will end one place, the last trade will be one place, and they will have a settlement that's either way higher or way lower than the last trade. How do they determine that?
Marshall, I got to take a break here, but I know a tiny bit about that, and I'll try to share it with when we come back from the break. But you guys have a great holiday and get down here this spring, okay? We miss you.
Oh, all right.
All right, we'll see you later, Marshall. God bless. We'll be right back, folks. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to try to answer the question that Marshall was asking, and that is about settlement prices. Why do they look different on one place versus another, even though they're very, very similar? Part of that can be done by someone putting an order in very at the last second to move the market above a certain point or below a certain point in order to protect margin. That happens more often than not. But the greatest example of this, and if you think these things are always fair, they are not always fair. But on October the 19th of 1987, with the Dow Jones down 500 and some points, and it was trading at 1,660, sitting right at a 61% retracement from the low of August of 1982. We were basically looking at the worst crash that we had ever had, with the Dow Jones down 16% in one day. And what happened that day, the Three Musketeers coming in, known also as the Trilogy of Finance, Greenspan, Rubin, and I can't remember the third dude's name. I think it was the guy at Harvard, was our secretary, Larry Summers. Yeah, Larry Summers, I think, was the third one that was involved with that. I'm pretty sure it was. I might be wrong, but I'm wrong often, but never in doubt. Anyway, those dudes made a decision that changed the whole world, because we could have literally lost it all at that particular point because there was no liquidity in the market. The banks were basically out of cash. They were under-margined on everything they were done because all the portfolios had collapsed, and they had been collapsing and they hadn't done anything about it. But with this 15% drop, they were hit. So what happened that night around midnight, as old Paul Revere came riding down the streets of Washington, D.C., they decided, hey, let's do something different. Instead of making market to cost on all the transactions that the bank makes, let's let the banks have it market to market. In other words, whatever the market price was that day, that's what they valued those portfolios at. And now you can see the difference. I mean, instead of having these huge losses, they marked it to market, all right? And that made it where the market was at that time, not market to, to where they bought it. not first in, first out. They just did it that way, and they did it until it, was finally rectified, and then they moved it back again. And that's what the trilogy of finance did to get the thing moving. And of course, that was the bottom of the market started up the next day, and we never looked back. So these are the things you have to go through when you're dealing with some of these people here, because that happens more often than not. Now, let's move on to a couple of things that really need our attention, because we were talking about this dollar index for quite some time here, and the dollar index gave up the ghost big time. It's been telling us that it was giving up the ghost, but it really gave up the ghost, and I'll try to share with you, what we're looking at here. This is the dollar index chart on the daily. As you can see, these little red 382 retracements. We had this little one here. Look at this, is where we had the big breakdown today. Doesn't look like very much, folks, but it's very, very important. And I'm going to show you why. Because on the next chart that we look at, and if the technical gods will bear with me, I think I've got it this time. We're going to be looking now at a weekly chart on this. And this is going to show you the importance of what happened to the U.S. dollar here, folks. Because we were setting it right at that beautiful 382 support here for well over 2 weeks, and we gave it up today. You can see it just absolutely broke down. That tells us that the next level will either be 50%, which is back near these old highs right back in here, or maybe even 61% retracement. The dollar index has changed. The euro is strong, and everybody wants to move to Europe. They want to get out of the United States. I don't know if it's that bad or not, but that's what they're telling us on the news these days. So we'll see what happens as we go through these things. Now let's look at a couple of these currencies, because I don't think what they're telling us is what's really happening. Because if you take a look, we're going to go across to the old British pound. We're going to look at this one first. This is a weekly on the British pound. And we'll get this up here and take a quick look at it. And there you go. There's the weekly on the British pound. We're setting just a tad above the 50% level. You'll see the ABCD pattern right here. Remember when it was 103, even I thought it was going to go to 85, and I still think it'll go to 85, but maybe not in my lifetime. But look how it reacts. Here's where we had the first pullback right here. This was telling you that this thing was not going to go down, because it makes it, a 382 retracement, and boom, there it goes, back up again. So we're completing this. The question is, how high is it going to go, given all this news announcement that we're having? But remember, all this stuff, can change. Look and see how, things really, they can really switch over. Now, the Dow has moved back to be up about 11 points on the day, which is pretty good. And then we got the S&P still up the Dow's up actually 100 points. So it's had a really good correction there. That's what we like to see. Okay, anyway, this is what we're watching here with the currencies. And I want to do a couple others here just to give you an idea that when you're watching these, you've got to look at, the dollar index. 53% of it is the euro, and the rest of it, the other 29 countries are in there. Each of them got a small piece, but you got to look at the yen, the British pound, and the euro. Those are the big ones. That'll tell you pretty much where you are. And here again, you can see what was happening today in the euro, because once we cleared that area of 105, it was off to the races, because that was at 105.40. Actually, you can see it over there. I marked it in red that once we went above that, that told you that this thing was going to be heading off to the races, and that's exactly what we did. So we'll be looking at least a 50% or possibly a 61% retracement in a market that is still very bearish. This is just nothing more than a retracement in a bear market. There was a beautiful, you can see here, we talked about this before many times. There's your perfect A, B, C, D pattern forming right at the bottom down here when we were trading at 96 and 97 and change. And if you counted the number of days down in the AB leg and the number of legs down in the CD leg, they were equal. All those things. We saw it in Treasury bonds. And what do we do now? We're seeing it the same thing now in the crude oil market. And then people look and say, wow, that's surprising. Well, these patterns repeat over and over again, folks. It doesn't make any difference what you're looking at. They just change the names of the things. This happens to be the euro. We've seen the crude oil. We're going to do that one after we finish with this Japanese yen here. We got to take a little break, but we got to talk about crude oil, because that's some major stuff happening over there. All right, the next one, we looked at the dollar versus the yen, and we get this up here. I have to give a big two to the horn to old Mr. Tom O'Brien, because I got to show you this chart, folks, to show you how good. You see this right here? This 3-drive butterfly pattern right here at the bottom, very bottom, way back here, about 9-10 years ago. I started speaking here in 2007. Right here is where Mr. O'Brien said, King Dollar, and by golly, look what happened. That was one heck of a move. Now, here's where we are now. We are not quite to the 382 retracement. Now, this is going to be really important here because this is a monster bull market, and this may be all you get. You don't know. We got to wait till that points get there, and then we'll be able to see if that's right or not. Listen, we got to pay a few bills. 877-927-6648, but I want everybody to do something for the old cowboy this next few days, next 7 or 8 days. Help somebody that needs help for Christmas, folks. It's a bad time to be in disarray, so do what you can. You'll never regret it when you see the big guy in the sky. See you right soon, folks. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to be talking here about the crude oil market. We're going to start out with the ETF. The USO, I don't trade this, I trade the crude itself, but you can see from these moon-shaped cycles, this is just basically a nominal cycle. You just take the low to low to low. What is that, folks? That's a 3-drive to a bottom pattern. Drive 1, drive 2, drive 3, just spot on, and you can see we've already started to have a pretty good rally. Now that is the USO. What we're going to do now is we're going to shift it over and take a look at the same thing with the crude oil. And if I can just find the crude oil market, I will be in good shape. My charts are jumping around with me again, and by golly, I'm going to have to find it some other way. So hold on just a second here. With any luck at all, we'll be able to find it. And then, oh, brother, I don't know what happened to the darn thing, but it's disappeared. My fault, folks. I thought it was ready to see what was going on, but it's not. But I do want to go on with this USO forward in a 15-minute chart to give you an idea what's happening there, because just like with some of these other markets, we use the same techniques in all of these markets. They're all the same. There's the 3 drive to a bottom on the shorter time frame, as you can see. And then we have the beautiful Gartley pattern right at the 78% retracement. And then it's off to the races. And we were trying to buy a 38% retracement here, folks, but it never got there. That area came in here. It missed it by about a half a dollar to, I think it's 80 cents. In the crude oil, and it's continued to go a lot higher. But crude oil has got some really interesting things, folks, that are important. First of all, let's just show you the relationship between the S&P, and this goes back a very long time. Hold on one second here. This was shared to us by one of our friends that used to be at Morgan Stanley and is now on his own. Hold on one second. We'll get this up here. You'll notice that the relationship between the stock indices and crude oil is at a very wide thing here. You see how the difference is wide? Now this is not so wide, you see, because this is basically going up. See, but this is going up and this is going down. That's what you're looking like. This one right here. See this one going up and this one going down. Boom, something happened. This one going up, this one going down. Something different. Pay attention. And that's what we're doing. We're looking at some of these things and saying, oh, wow, there's a 3 drive to a top pattern, a 3 drive to a bottom pattern. And then you're able to say, oh, well, maybe I could use something like that. So if we take a look, this was shared to us by our good friend Rich Anderson here on yesterday. And I want to get to this chart to show you. This is the oil stocks of what's been happening now. This is part of the reason why we've had these prices in gasoline go from $5 to $3 is that they've depleted all of our reserves. So they've got to put that stuff back in there, because if we go to war with somebody, we're in big trouble. So that's got to be replaced. So there's going to be demand coming from that. Plus, we've got winter coming up, and I think we're looking at some higher prices. Now, let's switch over for just a second. And this is something that we been talking about it for several days last week to start off with. But if you'll look at this, this is the heating oil contract. And I wanted to bring it to your attention. You can see the really nice pattern. There's a big A, B, C, D, A, B, C, D, and there's your D leg right here within about 4 cents of the absolute low that we're looking at. When you can see what's happened to heating oil these last few days, you just pick up the newspaper or just look at Bloomberg or CNBC, and you'll see that we've had a tremendous run. You know, we ran over $7, I think it's $7 a barrel in crude and over 30 cents in heating oil, as I recall. So that's telling us a major bottom has been put in here. So my strategy with the folks that follow what I do is I wait for the little ABCD, 382s, Gartleys, butterflies, whatever lines up. And when that pattern lines up in the direction of that trend, I want to be there, because I know that these patterns work some of the time, but they don't work all the time. They never do, and they never will. Now, this time of the year is a fun time for me, because I spent most of my last 20 years being a really good friend. My best friend, best man at my wedding was Mark Douglas, and he passed away 5 years ago, but I think of him daily. But his favorite quote is worth repeating here. I want to bring this up because I had a conversation today with a very nice young man from Paris, France. He's 26 years old, and he really wants to be a trader, but he is really having a hard time because he's looking at all the moving averages and all the stochastics and the indicators, and he says he puts them all on his chart, and he's so very, very confusing. And I told him, I said, look, you're 26, you got a long way to go. Just don't give up, because if you like it as much as you said in your letter, I said, you're going to make it, but you've got to just keep going until you find something that you really like. And remember, what Mark said was very, very important, folks. When you really believe that trading is simply a probability game, concept like right or wrong, win or lose, no longer have the same significance. They really don't. Absolutely don't. I mean, that's the real key to what you're looking at when you're watching these patterns, and doesn't make any difference what system you're looking at. It really doesn't make any difference. But if you understand that you believe in what you're looking at and you've proven to yourself that it works more than it loses, that's all you really need to know. It's never going to work all the time. You're going to have really long streaks, but after those streaks, you're going to have periods where things just don't work the way you think they're going to do, and that's really what you got to decide what you're wanting to do. So let's pay attention here. One other thing that for the Christmas time that we got to really remember, something really big is happening in this market, folks, and that is the gold market. And I want to bring it to your attention because this is a statistic that is really important because it tells you where the players are. And as you bring this to the chart to see it, this is what the big central banks are doing. Look how much they're buying, folks, compared to normal. Hello, operator. They haven't bought that much in the last 15 years. So they're really loading up on gold and silver. And you can see silver. My goodness, we've been extremely bullish on silver for quite some time. And you'll see here, when you look at this with the 382 retracement that you had way back there. Now, I don't take all pieces of that. I take nice chunks out of it on the way up. But, this being the daily chart in silver, you can see a beautiful 382 pullback. It was nearly equal to this one right here. This was a little less, but there was an exact, almost to the exact 382 retracement. And that tells us that we're going to hit $26 in silver, folks, almost 27. There's nothing in the way. We've got gold trading, 1837 today. We had the big ABCD down there at 1618. It's jumped $200 in a matter of, hello, operator, 5 weeks. That's a heck of a run, and it looks like it's just getting started. So we want to be buying pullbacks in that. Now, unfortunately, I had a beautiful short sale in gold last night at 1800. Of course, I had to stop at 1805, and it was working pretty good until they rang the bell and brought out that CPI number, and I took the quick $5 loss, and I was gone. But we had some other things that were working pretty good to make up for that small loss. The meal was going really well. And, of course, the Treasury bonds, we got stopped out of that, but that was also a really good move. And we went back in Treasury bonds after they made the high and rolled over because we really believe that interest rates will be going higher. What we're seeing now is just, I guess it'd be gerrymandering, moving the votes around, whatever it happens to be. So that's what we want to be, facing as we're looking at some of these things here today. So we'll take a break here. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I posted the chart of the 20-year note, 10 and 20-year notes. This is the largest of any of the commodities we trade other than the euro dollar futures, which are the U.S. dollars abroad. You'll notice that we had the 382 retracements through here. We had this big ABCD pattern down here. This is where we suggested, this was about 6 or 7 weeks ago, we were going to have a really strong rally in this because the contrary opinion on this was like 106% people were bearish. And now you see we've had a $15,000 rally in bonds and a $9,000 rally in notes. Now, these are equal so far, but we're right at a 50%. Even today, we made a slightly higher high in the notes and the bonds during that emotionalism when the announcement first came out on the inflation, not dead, but heading for the cemetery. And so that's what really happened with that. However, if we move on just a little bit differently and talk about what we were doing just a little bit earlier, and I believe I have that here, and there it is. Hold on one second. We handle it the same way that we handled the Dow Jones or the soybean meal, whatever we were watching. I wanted to show you right here. You can see here, there was your first 382 retracement here. There was your second 382 retracement here. This now has, well over a $700 profit in it. This one has a $1,000 profit in it. And that's just basically looking at a pattern where a market is topped and there's a possibility of a down move. Now, does it work all the time? Of course it doesn't. But you're looking at probabilities, and probabilities is where we dance. You have to have that because if everything worked the same all the time, there'd be a line around the exchanges or whatever there is by hundreds and hundreds of times to see, where how you get into that business. But that doesn't happen. I tried to tell that to that young man in France today, but, being a Frenchman, as sweet as they are, they sometimes don't want to listen to people. But that's what we're paying attention to here as we look at some of these things today. Now, this is my own personal opinion now, and I will share it with you because I put it in the newsletter. And if you want to really get an idea of where these markets went today, go take a look at the weekly newsletter this week because we said you're going to have a high probability of seeing 4165 in the E-mini S&P. Well, they switched over to the March. It got to 4175. The December only got to 4155, so it was very, very close. But the others, look at the NASDAQ, folks. You want to see some. I'm going to do this live right now because this is really an amazing one to me because that's the little one of all the groups here. But it'll only take me a second to get it up here to look at it because I saw it this morning and I said, this is trouble in River City. And, sometimes River City is not in your favor, but we're going to get this up here so you'll be able to see it. Hold on. It's got to be done on a daily. Oh, my goodness. Are you kidding me? Now, you don't think. God, I love this business so much. Thank you, Jesus, for letting me get in, staying it this long. I mean, I tell you, I just, hey, listen, I'm not even short this thing, but I got to show you something, folks. If you don't believe in 382s and you don't believe in patterns, and pack up your bag and move to where is it? Oshkosh B'gosh up in Wisconsin, because there's your 382 today to the absolute $10 tick when the NASDAQ was up 500 handles, one standard deviation right at that 382, okay? That was the high of the day, and as you can see, that long bar to the downside, that's known as a hanging man. So that's a major significant high today in that NASDAQ. And they brought in the band and said, okay, let's get the old guy that, what was the guy that tooted his horn to get the rats to follow him? I can't remember, that was someplace in Ireland. But anyway, that's basically what happened, folks. Look at that thing. I mean, right on the money there. It's 12,313, and the high was 12,339. $400 difference. And look at where we're trading now at 11,900. We're down 500. Being up 500, down 500. Pays your money and take your choice. Now, take a look at that chart really closely, because on the far left, you'll see over there in August, we made a big ABCD pattern up there. Remember that? When everything was going good, and all of a sudden, what happened? Bada bing, bada boom, China came in and started locking down again, and who knows what's going to happen next. So those are just a few of the things that are going on here today. But folks, one thing I can actually make a prediction on is that we are going to see volatility in 2023 that is going to surprise the people that are trading in 2022. When you see stuff like this happen, where you see, basically you saw a $1,500 swing in the Dow Jones Industrial Average today between up and down. That's what you had. Go look at it. I just did it just a minute ago, but at the high, we were up 1,000, or 35,200, the low 34,200, and on that way up, we were basically on our way up to that level. Then we backed off to be down almost 200 on the day. Then we rallied up to be up 100. I mean, that's easy. That's 1,800 points right there. I mean, that's what you got to be watching. That's why I look at these patterns as a way of entering and not risking very much. And that's what I'm shooting for. I'm going to take a minute here because I really believe this, folks. I've only met Basil Chapman twice in my whole life. In these last 15 years that I've worked with TFNN, I met him down in Clearwater, Florida. I believe the first time in 2002, and I met him again, I don't remember where, but I think it was also in Clearwater in 2007 when I first started doing the show. But folks, I've seen a lot of guys that do a lot of stuff, but he really has good quality things that you can use to make a living. He's got so much in his quiver with his bow and arrow that he's got just a lot of things. And just if you pick one or two of them up for $295, I mean, that's like the cost of a meal for a family of four at Christmas almost when you go out to eat. So if you've got a present that you want to give to yourself, give it to Basil Chapman, because his 5.5 hours will be well worth paid. And not only that, you get a whole month. That's worth $149 right there. So it's only costing you $150. And if you can't make money out of the things he's giving you to $150, take the class again, because I think they offer it to you. If you don't like it the first time, you can take it the second time. But he's got a lot of great stuff. He does a lot of ABCD types pattern. His way of counting is a little different, but they're the same type of patterns. And, basically just doing ABCD. And if you look at those and try to fit things in with it, he's got some great stuff. I mean, his opening price stuff is priceless. And in addition to that, you get the 2023 forecast, which is really great. I mean, that in itself is pretty good. Also, by the way, I was informed today that Larry Williams is giving a YouTube, and I'll be reporting on that tomorrow. Always good stuff from Larry. And, of course, we'll have Peter Lighty sometimes after the first of the year. Tim Boss still needs some white light, folks. He's not doing very well, but he's not at death's door from what I've heard. But he's still struggling. So let's keep praying for our good friend from Financial Cycles Weekly, Tim Boss. So that's what we're hoping to do anyway. Maybe next week we'll squeeze Norm Winsky in for a day if we can. And I'm supposed to meet Stan Harley tomorrow for lunch here in Arizona. So that'll be a fun thing to do. Listen, we're going to take a break here. And when we get back, I'll stop the commercials and give you my 2 cents worth on what's going to happen tomorrow. And believe me, If you pay more than 2 cents, you overpaid.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. I posted the chart of the E-mini S&P March contract showing you that we made the 78% retracement up there at 41.75 today. Folks, if we clear above that, I am going to be very, very bullish. Until that happens, I have to be bearish because you can see just looking at this is lower highs going back to January 4th when we made the big high. So this is just the 1, 2, 3, 4th major high that we've had since January. Here we are coming up into what? January coming up, so let's pay attention to that. If we get above that, now right now we're way more than 100 handles lower than that, so that in itself is usually a lot, but with today's type of environment where you're up 120 handles in the S&P at one time, I mean, this is a really wild market, so you've got to pay close attention to it. Also, one thing, someone just dropped me a note here that they thought that I was promoting Basil a little too much. Folks, I did that because I believe in it. I don't get a dime out of that, and I wouldn't expect a dime if I got it. $2 maybe. No, I mean, he worked. It's earned, folks. That guy's damn good, Basil Chapman. If you want to help your trading and you're not doing well, spend a couple of bucks over there on the 15th for 5.5 hours and learn something. He's really good. And you get him a month, you give him a whole month of his service, and that's usually $140, so you're only paying $150 for the whole thing. That's nothing. That's what, three $50 meals. No big deal. Anyway, listen, folks, do something for your friends. I'm going to keep harping on this until January 1st. Then I'll stop, starting again in January 2nd. Help your neighbor, folks. You can't take your money with you. You got to do a little bit to help others, or it ain't worth being here. That's what it's all about. Sometimes you're going to get ripped off. Yeah, that's going to be the case once in a while. But most of the time, you're going to be doing some good. So let's do that. Live every day in an attitude of gratitude. And may God bless. And Billy Ray Valentine, Capricorn, is signing off, and we'll see you on the flip side tomorrow.